Hello and welcome to this week's VectorVest special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm very happy to be presenting this week's topic, which is titled Dividend Income, One More Benefit of Worry-Free Investing. We began our journey of the worry-free investing model this year back in January, and it's focused on the power of buying companies with consistent, predictable financial performance, which happens to be the criteria used to define the VectorVest indicator of relative safety, or RS. Now, back on January 29th, Ms. Kathy Onan introduced to us the long-term winner RS descending search, and it showed a trading plan that returned over 500% in capital appreciation alone since 1996. And it did this by simply buying high RS stocks during a confirmed call and selling them when the VectorVest rating became a sell on the stock, and simply replacing those stocks during a confirmed call. The following week, I followed up with a presentation that addressed selling covered calls for added income in the portfolio. And just last week, Mr. Dan Mish showed how to minimize risk and maximize gains using the collar trade, which simply uses the covered call premium to finance a protected put option. It's a great way to protect profits. And through all of this, we still have running currently our worry-free investment challenge using relative safety as a core requirement. That brings the safest, most predictable stocks to the top of any list. And we're excited to see how this challenge ends up later this year. Now today I want to take just a few minutes and fill in the last piece of the puzzle when it comes to worry-free investing. We've already covered capital appreciation, and we've also talked about using options for income and insurance for our portfolio. What I'd like to do is take a look at the flow of dividends received over the life of our initial worry-free investing plan. Now, while dividend income may not always seem exciting, over the long term they sure do add up. So let's start with the original test of the plan. So here I have a snapshot of the trading plan that Kathy initiated back on January 29th. We're using the long-term winners RS descending search. Our timing list uses the confirm calls. Our start date was way back in May of 1996, and I've run it current to Wednesday, June 14th's close, which left us with a total of $612,576 in the portfolio, and that translates into a gain of 512% return over that 20-year time frame. For that time frame, a very reasonable commission amount of $3,422, and that return annualizes out to 25.5%, or just under 10% on a compounded basis. Now the number we've been addressing is the max drawdown, almost 30% max drawdown on the portfolio over that 20-year span. Now, as is the case with most back tests, especially the longer term tests, that drawdown is usually going to occur sometime around 2000, just after the tech bubble burst, and then of course in 2008 when the housing crisis struck. So those strategies that involve the options, the covered calls, and or the protective puts and collar were a great way to help to mitigate this drawdown. Which brings me to tonight's topic and how we're going to use dividend income again to help with that drawdown. And keep in mind, these total numbers do not represent the dividend payout. From here, I'm going to go into the program and I'm going to take us into the Unisearch tool. And I'm going to take us down to the retirement folder found in the search directory. And we're going to locate that long-term winners RS descending search. I'm going to run the search, and I just want to take a moment to talk about some of the dividend information that we'll be looking at. Break down that menu, and on our spreadsheet within the search we see the top 10 stocks are returned here, and after we have our VectorVest information here, we have just to the right of the recommendation column our dividend information. There are 5 categories here on our spreadsheet. The first gives us the dividend amount. This is the dollar amount that's paid out annually, broken down into either monthly, quarterly, sometimes semi-annually, but that dividend number is the dollar amount per year. The dividend yield is the yield that translates to based on the price of the underlying stock. Our dividend safety number. On a 0 to 99 scale, we like to see these numbers around 75 or higher because, as I like to say, what good is that dividend that they pay if the company doesn't have the ability to continue to pay it? So that dividend safety number is important. And finally, dividend growth. This is the growth rate of that dividend year over year. and we take that dividend yield, safety, and growth, and we roll it into one number called the YSG. Similar to the vector that gives us the VST for relative value, safety, and timing, we have a YSG for dividends. Now, as I continue on tonight, I want to point out the parameters that are part of the long-term winners search, and you'll notice that dividends are not a parameter here. It has no numbers here that guarantee any type of dividend being paid. We'll see as an example, Edward Life Science comes to near the top of the list. However, the company does not pay a dividend. Now, just as an example, if you wanted to even improve upon the numbers that I'm about to show, you can go into the parameter box here. And again, we see the parameters are very basic. The stock has to be greater than $1. 50-day moving average volume has to be only 100,000 shares. And here we simply don't want any pink sheet or bulletin board stocks on the list. So very basic parameters. And of course, the power here comes from the sort, which is relative safety in descending fashion. So the highest RS stocks are coming to the top of the list. So again, if I want to try to improve upon the dividend numbers, all I would need to do is come into the empty box here and add a parameter. I'm going to choose stocks, the dividend analysis, and go to the dividend yield. In the operator box, I'm going to request that the Unisearch tool bring me back stocks that have a dividend yield greater than 0. So in other words, only stocks that pay a dividend will now populate the search. And so we'll see our dividend payouts here in the dividend column. And that's just a quick tip I wanted to show before I go back and analyze some of those dividend numbers that I'm talking about. I've begun by inserting a table here with some of the better performers from the original worry-free investing trading plan. Dan and I spent a good amount of time manually going through every trade in the program to calculate these dividend returns. And here's just a portion of what we've come up with. At the top we have Pepsi here. We opened this trade back in November of 2002, closed it in February of 2000. So just over 5 years the position was held open. When the position was closed, we held 356 shares, and I just wanted to note that these share amounts over the period of time do reflect any split adjustments for the life of the trade. So if the stock did split, we do recognize that here in our share amounts. Next, we have the number of payouts. Over that 5-year period, just over 5 years, we did receive 21 payouts from Pepsi. And next, we have our average amount per share. We were able to collect an average amount of 24 cents per payout. Now, that average price, it's important to note, is taking because over the 5 years, the amount of the dividend payout fluctuated. And in Pepsi's case, it continued to rise. So what we did is we rounded. Some of these decimals went out 2 and 3 or 4 extra ticks out to the right. So what we did was round them, and in this case to the lower amount, so that there was no artificial inflation here. So these are rounded numbers for the dividend payout. So this is the average amount per share. And when we look at Disney, we see a deposit here at the end of the trade of over $1,700, $1,794.24 is what we calculate that Pepsi paid us just to reside in our portfolio for those 5 years. Vodafone was next, owning 947 shares. Here we had the stock for just about 3 years. We were on the receiving end 6 times of a 27-cent dividend, gave us over $1,500. Chevron, another good one, 68 cents is the average amount, gave us over $1,100. And here's a great one, CVS, which was opened in August of 2012 and is actually still an open position in the current portfolio. We have 838 shares. We were able to collect 15 different payouts averaging 27 cents a share, which gave us over $3,300 for the position. HP and MLP with a high yield gave us just about $2,000. And then finally, I added EOG resources in here just to show that for all the trades, not everyone is going to garner that kind of return. So here's one back in 2008. We held it for less than 3 months. We held it for just about 3 months, 463 shares. We were able to capture one payout of 6 cents, and it netted us just about $27. From here, I'd like to take a look at the benefits of dividends from worry-free investing by looking strictly at the numbers. First, 177. That's the number of trades placed since May of 1996. In the current worry-free investing model, We have 167 round-trip trades open and closed, along with 10 currently open positions in the portfolio. The next number is 544. This is the number of dividend deposits we received as of the close of trading on June 14, 2016. $51,823.02. This is the total dividend income for the life of the portfolio. Now that's taking the 177 trades placed, keeping in mind that 60 of those 167 round-trip trades did not garner us a dividend payout for one of two reasons. One, we didn't hold it long enough to collect the dividend, or the stock simply didn't pay a dividend at the time, which is why I took the time to show you can add that parameter that makes sure every stock in your portfolio pays some type of dividend for you. And finally, $664,399.24. That is the total value, including dividends, for the original worry-free investment model portfolio, again, from May of '96 to June of 2016. Now, these numbers can become even more impressive when I tell you that this dividend income is simply added after Dan and I manually went back. This does not include the possibility that these dividends were reinvested, whether it was a drip plan where you bought more of the same stock or simply used the proceeds to dollar weight your portfolio and buy more stock as you replaced stopped out positions. And so when we explore some different possibilities on how to reinvest or use these dividends, it becomes, I believe, even more impressive. And so there we have it, the trifecta that makes up the worry-free investment portfolio. We start with capital appreciation. We buy high relative safety stocks, safe and predictable stocks in our portfolio. We learn 2 basic option trades, selling covered calls and buying protective puts, and combining the two to make the collar trade so that you can lock in profits and not worry about those downtrending markets and giving back your gains. And finally, we finished it off with dividends, the quiet but powerful padding that can add to your portfolio's bottom line. So what I've gone through are all the parts of the VectorVest Worry-Free Investing Seminar. Now, we have received some great feedback from attendees of our already held seminars that we've done on the road this year, and we're very excited to offer this 2-day all-inclusive seminar to all of you online. That's going to take place as an online event on Wednesday, June the 22nd, and day 2 will be conducted on Wednesday, June the 29th of 2016. If you simply go to our VectorVest homepage at VectorVest.com and you choose on the toolbar Live Events, we go to US Events, you'll see the Worry-Free Investing Seminar online event listed. If you click on Worry-Free Investing Seminar, you will go ahead and get the information here, what we're going to present. And yes, that is me. I'll even give you a little snippet of what we're going to do for you. Down below, as I scroll through, we have our entire agenda for both day 1 and day 2. And we have our Register Now button here. So go ahead and click there and register. Again, this is going to start on June the 22nd. We'll have a live event, and we'll continue that on June the 29th for our Worry-Free Investment Seminar. So we look forward to seeing you there. As always, if there's anything we can do to assist you, please don't hesitate to call 888-658-7638.